Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about how to qualify for a home or rental property even though you just had a bankruptcy. If you have old child support, nope, can't do that one. Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about how to qualify for a single family home or multi-unit building even though you just had a bankruptcy, even though you just had a repossession, or even if you just got evicted yesterday, you still can qualify for home ownership. Let's go straight into it. So in short, when you are looking for a home, a lot of people would easily think, and I've kind of touched on a couple of these things in various videos, but I never spent an entire video talking about it, okay? So number one, how can you purchase a home with having a previous bankruptcy, all right? So the reason how you can purchase a home with a previous bankruptcy, sorry, all these P's in as I'm talking. So how you can purchase a home even if you have a previous bankruptcy. So if you have a Chapter 7, okay, if you're currently in a Chapter 7 or you're thinking about doing a Chapter 7, then or if you are after a Chapter 7, let's talk about that. So if you are looking to go into owning property, then you may want to hold off on doing a Chapter 7. Just improve your credit score. You can go into owning property. If you're in the middle of a Chapter 7, you can't do anything. The trustee won't even allow it. Even after discharge, you have to wait 2 years from the discharge date to go into owning property. You can't even be co-signed on a loan either. So I'm telling you, take your time and strongly make the decision if you're going to go with a Chapter 7. Now, after a Chapter 7 is fine, but it has to be 2 years, as I just mentioned. Now let's talk about Chapter 13. With a Chapter 13, if you're thinking about going into owning property before doing a Chapter 13, I strongly recommend going into improving your credit score. Then if you have to do the Chapter 13, just do your thing. Now, can you buy a home in the middle of a Chapter 13? Well, let me clarify what the middle is. There is no middle, but can you go into property ownership while still being inside of your bankruptcy and it has not yet discharged? That's what I mean, okay? It's still open. And the answer is yes, after 12 months consecutive on-time payments. So for example, I spoke to a young lady. She said, I want to go into home ownership. And I said, okay, cool. Well, hey, how far are you along the process? Well, I'm gonna let you know right now, I got an open Chapter 13. Not a problem. How long have you had that Chapter 13? So it helps to know these things. But either way, she said, okay, well, you know what? I got the Chapter 13. I said, well, how long have you had it? She said 2 years. I said, in the last 24 months, have you been on time for 12 consecutive months? The most recent 12. That's what it is. The most recent 12. And she says, yeah, I sure have. Okay, great. Then we go ahead and start to keep going the process. Now, keep in mind, for those who don't know, you still can improve your credit score while you're in the middle of a bankruptcy. We know how to do it, so we can show you how to do it. All right. Either way, we've been helping her improve her credit score. That way, when she has that in order, we'll be able to, go ahead and go with the process and getting her pre-approval. All right. Let's talk about an eviction. So now you can have an eviction on your credit report. You can have you could be just having just had an eviction yesterday. Granted, it sucks for the landlord, so that's a slap on the wrist, right? But things happen for different reasons. I've also seen it where people got evicted, quote unquote, but there were mice in the building, or the building was inhabitable and they just decided to leave, and before you know it, the landlord felt salty about it, and now you got eviction on their credit report. So how banks look at evictions, and as well as bankruptcies, but I'll categorize it all at the end. But short version is, with an eviction, they just look at it as debt. It's just like if you had a credit card and it was charged off. If you had, any other type of bad debt. Don't get me wrong. That amount of money, anything above $2,000 cannot have an open dispute. We talked about that in a video, but that any bad debt that you have goes towards it reduces your buying power, not by a lot. I would have to say probably for every $5,000 worth of bad debt, it probably reduces your buying power by 1,000, right? Now every lender is going to be different. Every state's going to be different, but based on what I've seen with all of my clients, nationwide and local, that's usually what it is. But just do understand, bad debt will most definitely reduce your buying power. Not a lot, but it most definitely plays a role. Now, why is it not that big of a deal? Well, a 30-year commitment. Let's say that the bank is looking to be in a relationship, right? Because technically that's what that is. When a bank is looking to be in a relationship, they would rather have you for 30 years versus the 6-year auto loan, the 5-year auto loan, the 2-year motorcycle loan, the credit card that you use and sometimes use. They want that 30-year commitment. Even though the interest rate is so low, but you're talking about interest over 30 years, they making good money, and most people that have that are paying a mortgage, even if they go from a mortgage to renting or they lose their home or whatever the case may be, the chances are, that a person would try to do whatever they can to try to hold on to their home. Even if their home, worst case scenario, they're not able to pay it, then the bank will end up, just reselling it. So there's always a home that's going to get sold. All right. There's a buyer for every single property, even if it's completely dilapidated in the absolute worst neighborhood, somebody's going to buy that home. All right. Then let's go into repossession. Exact same thing. Here's the thing. Granted, banks understand things happen because that's how things work. It's a cycle of life. A lot of us made a lot of mistakes when we were younger, unless we were really coached. But it's not just being coached. It's really a two-part process. Being coached while you're young and listening while you're young. A lot of people don't even have the information. No one even gave them the game plan, right? But at the same time, you have to have a game plan, while you're young, in your 20s, your 30s. But then at the same time, you have to consistently follow that. But a lot of times people get repossessions, when they're looking, when they've made financial mistakes. Doesn't really too much matter the age, but that's normally when it happens. It's usually when we're in our 20s and our 30s. With that said, the age doesn't really make necessarily a difference. But you have to understand that it does, again, play a role in your buying power, okay? Now, can you have a repossession that's got some age on it and still go into home ownership? Absolutely. You can have a repossession yesterday. What banks care about the most is in this order: credit score first, income second, what's on your credit report third. Again, that's credit score first. So that's going to determine whether you can even get approved for the loan, at least the score itself. Now, also, they don't know if you're going to have, obviously, a DTI situation, right? That's a little bit later. You can go into that. Then, of course, your income, the source of income. We're just talking about just the score itself. Then number 2, obviously, your income, making sure that things work out, the income source, how much it is, the DTI, all that fun stuff. And then, of course, what's actually on the report itself. So many of you, and not just you guys, but a lot of people, I'm just here to give you confirmation that whatever that bad thing is on your credit report is not the end of the world. If you're still looking to go into home ownership, again, we have the lender to help you. We have the platform to put everything in place. If you even if your score is still not there, our team can help you. Just yesterday alone, we broke the company record. I didn't even talked about that. I'm going to have to put it on social media and Facebook and go live. But we had 5 pre-approvals on yesterday. It was an amazing day for 850 Club, and it's an exciting thing to help people go into home ownership, even though it's so much stuff going on in the world. Granted, we're never saying bragging or anything like that, more so bragging on the success of the company, but more so because a lot of people are going through a lot of situations. They're losing their jobs, they're being demoted, they're losing hours and things of that sort. So it may seem that it's all doom and gloom, and that's not necessarily the case. You still have to remain positive. You have to remain positive because you can get out of your situation. And at the end of the day, the bank doesn't really care. They care about what you've done recently. Don't get me wrong. Can you have a repossession and still be a 700 score? Absolutely. Can you have an eviction and still have a 700 score? A chapter 7, chapter 13 is still on your credit report and still going to home ownership and still get a 700 score? Absolutely. Don't let anyone else tell you otherwise just because they haven't done it. Here's another thing I see too. I don't have a lot of time to respond to comments. As a matter of fact, I don't even read a lot of the comments because it's so much. I can't keep people from giving bad information, so just understand when people give you information, more than likely there's a 95% chance they've only seen less than 5 credit reports themselves, theirs included. Okay, they may have seen their boyfriend, girlfriend's situation or whatever the case may be, but other than that, most people have seen their own credit report. And just because something worked for them doesn't mean it's going to work for you, because everyone's foundation is different. Someone says, well, I opened this account, I got 100 points. Yeah, you was a 400 score. It was looking for anything positive, right? Then you say, well, I opened that same account, only got 10 points. Yeah, you're 680. You've been doing the right, you've been on the right track. You know, so just little things like that. Just take people's information with a grain of salt unless they've seen thousands upon thousands credit reports like 850 Club, okay? So if you like this video, like it, you want to share it, and as always, be sure to subscribe as we have nothing but great content on the way. Thank you guys so much. Have a great day.